Welcome back to the channel. Today, we're looking ahead to one of the biggest events on the financial calendar, the Federal Reserve's upcoming interest rate decision. This move will impact everything from your mortgage payments to Wall Street trading, and the stakes couldn't be higher. The Fed sets interest rates to balance two big goals, controlling inflation and supporting employment. Every shift in policy ripples through the economy, influencing borrowing costs, business investment, consumer spending, and even global markets. So far, the Fed has spent the last couple of years raising rates to bring down inflation. The pace of those hikes has slowed, but the big question remains, will the Fed hold steady this time, hike again, or start signaling cuts down the road? There are three main things investors and analysts will be laser focused on. 1. The actual decision, whether rates go up, stay the same, or possibly hint at easing. 2. The Fed's economic projections, their outlook for growth, inflation, and unemployment. 3. The press conference, where every word from Chair Jerome Powell will be dissected for clues about what's next. Here's what the possible outcomes could look like. If the Fed holds rates steady, it signals confidence that inflation is cooling, but they'll still want flexibility. If they raise again, it means they're not convinced inflation is under control yet. If they lean dovish, even while holding steady, markets could take it as a sign that cuts are on the horizon. Of course, there are wildcards. Inflation could surprise to the upside. The labor market could shift quickly. Global risks like oil prices, supply chains, or geopolitical tensions could also sway the Fed's tone. For homeowners, high rates mean elevated mortgage costs. For borrowers, loans and credit cards remain expensive. For investors, rate-sensitive stocks could swing sharply, bond yields may shift, and the dollar's strength will be closely watched. Once the decision is announced, markets will immediately react. Stocks, bonds, commodities, and currencies will all move. But remember, it's not just about the rate itself. It's about how the Fed frames the path forward. So, all eyes are now on the Fed. Will they hike again, hold steady, or finally start hinting at easing? Whatever they decide, the message they send will shape the economy and the markets in the months ahead. Stay tuned. We'll break it all down once the announcement comes out.